Hi friends, in this video we will focus on the composition scheme under GST, and since there are a lot of changes which have come in by way of notification and other changes, we thought that it's good that we should focus one video on composition scheme under GST, and that will also be an updated video based on the latest updates which have come in. So let's start. So basically under the let's first understand what is composition scheme. So basically composition scheme is for small taxpayers who have a taxable turnover of up to 75 lakhs in a financial year, and within state. So suppose a taxpayer, a small grocery shop, having a sale of more than 20 lakh but less than 75 lakhs in a financial year within that state itself, within its itself, then that taxpayer can actually go for a composition scheme. Under composition scheme there is a fixed rate, so either 5%, 2%, or 1%. For it's a fixed rate which all the composition scheme taxpayers needs to pay on the output. But the negative side is that they will not get any input on the taxes, or the on the inward supply which they take. So basically it's a tax. It's a fixed tax on their output. So let's start. So the tax rate is 2%, as I was referring, 2% for manufacturers, 5% for restaurant owners, and small restaurant owners, and for other traders and for other taxpayers the rate is 1% under the composition scheme. Moving forward, so this is the tax invoice. This is the invoice for composition scheme. And if you see, it's clearly says that under the invoice, we need to clearly mention that we are registered under the composition scheme and we are not eligible to collect any tax from on supplies. So we have to clearly mention this, and this is a format for a composition scheme. Now let's understand the benefits of composition scheme. So it has got limited compliance. So there are only quarterly returns. So there is only one quarterly return which needs to be filed under composition scheme. So it helps to maintain lesser book record keeping and monthly compliance and other things. It has got limited liability. So the tax rate to be paid is very limited. Either it is 5% or 1% or 2%. But on the negative side is that they are not eligible to take input of that. So since it's a quarterly return and the tax rate is lesser, there's high liquidity for them. They will have, because their working capital will not be and since the profit margin of a supplier in a composition scheme is more than the normal taxpayer, based on the calculation. So even if they don't get input, they have little better advantage because they have little better margin because of this, the differential tax rate, as because the output, the rate, the tax at which they paid on output is much lesser and fixed. The negative side is that composition scheme is only for interstate sale. So if they are doing if they're doing an interstate sale, then it's not possible. It is only for intrastate. Within the state the sale can happen. There is no credit of input tax, so all the provisions related to input on B2B and all those things, credit is not allowed. So credit will not be allowed on input paid. And there is no collection of taxes. They cannot collect any tax from the supply. So they have to charge a nil tax invoice. And there are stringent penalties as far as under the GST is concerned. And e-commerce are out of the composition scheme. So if you are doing a sale on e-commerce, then also you are out of the composition scheme ambit. So if you are doing an interstate sale, or if your sale is more than 75 lakhs, or if you are doing e-commerce sale, then you will not be you will come out of the composition scheme. So let's have some of the main points. So which returns are required to be filed by composition scheme? GSTR 1, that is on quarterly basis, and GSTR 9A, that is on the annual return. Is liability to pay taxes under reverse mechanism covered? Yes, under the even the composition registered dealer need to pay taxes under reverse charge as a normal taxpayer would pay, and that is a cost to them, because again they will not be able to take input because there is no output which they are generating. Uh, Again, taxpayer, what are the transitions provisions for a business transit for composition scheme to a regular tax taxation. So they are allowed to take credit of their input held or semi goods held, goods on the day immediately, the day from which they start opting as a registered taxpayer. So they have to do a stock valuation on the day preceding to the day they wish to be a normal taxpayer, and on that they will again start taking input. They will start taking input, and they will move to a regular taxpayer. So what are the conditions for availing input tax credit at the time of transition? The conditions are such inputs or goods should be used to make taxable supplies under GST. Taxpayer was eligible for sandwich credit on such goods under the previous regime, however could not claim it because of the composition scheme. And such goods are eligible for input tax credit under the GST regime. The taxpayer has a legal evidence of input tax credit, input tax which they have paid, and invoices should not be for a period of more than 12 months. What is the treatment for input tax credit when transition from normal scheme? When switching from normal scheme to composition scheme, the taxpayer shall be liable to pay an amount equal to the credit of input as a tax for switchover, and the balance input credit after payment of such amount. So if any lying in the ledger. Who can opt for composition scheme? Manufacturer, as I said, manufacturers, restaurant, other suppliers of goods. The turnover must be within 75 lakhs, and that the limit has been uh, the limit has been reduced to 50 lakh for other states, small states, and northeast states. And no, and also a composition scheme cannot collect taxes on their invoices. So on the invoice, let's go to the invoice once again. The invoice, they need to clearly say that they are registered under the composition scheme and they are not eligible to collect taxes. Moving forward, who cannot optate for composition schemes? So service providers other than restaurants. So all the service providers, if you are into supply of services other than restaurants, then you are not eligible for composition schemes. Any business that makes interstate supplies are not eligible. Any business registered on e-commerce, not eligible. Manufacturers of ice cream, edible ice cream, pan masala, tobacco substitutes, not eligible. A person registered as a non-resident taxable person is not is not eligible, and a person registering as a casual tax person is also not eligible for under this scheme. So these are the very crisp video which we created on composition scheme, and a taxpayer should take benefit of the composition scheme if your turnover is less than 75 lakhs, and if you have only intrastate sale, and you don't have the interstate, or you are not doing a e-commerce sale, or you are not into supply of services, then I think you can take benefit of this. If you have any queries, you can write to us, or you can email us, or you can call us, and we will be more than happy to answer your queries. Thanks.